Welcome, everybody. Thanks for joining us for Arthur's Roundtable podcast. I'm Arthur. Super happy to have Nick back and now Marcus. Full disclosure, invested in and super supportive of Champion Ventures. But what we're going to talk about today is uh, Marcus being a new guest, what Nick and Marcus has been up to with Champion, some of the cool stuff they've been involved in, and what's going to happen in the future. So, super glad for everybody to join us today on the podcast. And Nick, take it away.
Sure. Thanks, Arthur. I appreciate you having me again.
Sure.
Rifle fast background for those that don't know me. So my name's Nick Edwards. I'm one of the founding members here of Champion Venture Partners, along with my partner Marcus. Um, Rocket fast background. I'm a former athlete and kind of transitioning out of sport. For me, I actually had I would say, a smoother time transitioning than a lot of folks that are out there. And I worked with NFL, NHL teams, and everything that I've done has really been in the epicenter between, the business of sports business, because they're distinctively different, all the way through kind of that combination of sports medicine. So I've been in the founder seat, went to be an LP in funds, angel investor, to being a general partner in funds. And along that path, I actually met Marcus back in, we need to track back the exact date at some point. We'll just call it the pre-COVID buddies. Summer probably around 2017. We came together over a sports tech and timing gates company. And at the time, I was working with some hockey teams in the NHL, and serendipitous meetings always kind of pan out to be something fantastic. And we really started to iterate and talk about the lack of meaningful ownership opportunities for athletes transitioning out of sport, because we both saw it from both of where we were at. And for me, even though I had that seamless transition, not everybody gets to choose when they retire. Not everybody gets to, have a stake in that, whether they get injured, they get hurt, they get cut. There's a lot of things that can take place. And kind of with both of our experience, we landed on Champion Venture Partners. And I wish I could say that everything was planned purposefully, but it really was going between looking at our initial investor avatar and then designing it. Found it that not only is sports a very ubiquitous asset class where everybody has a connection to sport, but beyond that, we could create a vehicle that's also ubiquitous between accredited and non-accredited investors and the like. And we can dive into that a little bit more, but I'll hand it off to my partner, Marcus.
Yeah, thanks. Nick, Marcus, welcome. Please share with us a little bit of your background.
Perfect. Happy to be here and appreciate the invite, Arthur.
You bet.
My name is Marques Colston, former NFL wide receiver, played 10 years with the New Orleans Saints. Um, about 3 years into my career is when I really started my business journey. Started as an angel investor, have always been really, really active in the companies that I've invested in. So for me, what that meant was invest the capital and then roll up my sleeves and figure out how to join the management team, whether it was strategy, business development, operations, and I kind of did that off and on for the last 15 years. I've been in a handful of ventures in the cannabis industry, in the sports industry as an owner operator of indoor and arena football for 7 years. So I built a really interesting background really at the intersection of sports and business that way. Have bounced around in a couple different other avenues post football. Got licensed as a financial advisor. Worked in that industry for 3 years, supporting the athletes and entertainers, and have done some consulting work, again, in and around that intersection of sports and business. And, it's really interesting, as Nick kind of pointed out, how he and I met over a sports tech company, and really, ideating and kind of building, what really the why behind CVP. What seemed like a really random transition path from, post football into where I'm at now, really has lined up for me personally in a way that every single skill set that I've built along the way, from operations to obviously the investment piece to the consulting piece, I can bring every single one of those skill sets into CVP. And that's one of the things that when you can find that connection and find that transition point, it just makes everything, just that much more aligned. And as we continue to build this out, as Nick said, we'll kind of dive into the details a little bit more. But that ability to solve a real challenge that I've seen, obviously, as the player seat, I've seen it from the financial advisor seat, I've seen it from the investor side, where, most of the success of investors really derives from their ability to access quality deals. So having the experience across all those different landscapes, I think really positions us at CVP and our team to approach this sports asset class in a different way and really solve for the athlete investor, at the same time solve the challenges for the retail investor, and really kind of sit in the middle of the ecosystem as this connective tissue that connects investors that are willing and want to be in the sports asset class with really high quality deals that we can source through our network, and really create this ubiquitous platform, like Nick mentioned, to create wealth building opportunities across the landscape for a lot of different types of investors. So really excited about what we're building. Excited about our progress to date, and really looking forward to sharing more with you guys over the next hour.
Yeah, it's super helpful. I'm excited about it too. I might get this wrong, Nick, but you started out not necessarily thinking that you could make that asset class available to the retail investor, and it evolved from a holding company to something more than that. Is that accurate?
Yeah, that's spot on. Because, taking a step back, like I said at the beginning, we're looking at that athlete as our kind of initial investor avatar. And so, yeah, and so looking at the athlete as kind of our initial investor avatar, what's interesting is when you look at and study an athlete as an investor, you find out that a traditional 2 and 20 model doesn't work. So you can't hold up capital for 5 or 10 years, do a lockup period. Liquidity options are something that is really commanded by this group. Another piece of it is that the accreditation status, if they're playing, may very well be an accredited investor, but then slide to a non-accredited status. So we had to get really creative and nimble to do that. And I believe we've kind of stumbled onto, and I'll say stumbled specifically because we had to iterate on this, as you said.
It's
Like,
a
I wish
series of adjustments,
I
right?
wish I could say it was all planned, but I'm definitely not the genius to create that. But it's literally studying what's out there, studying the people who have done this very well before, looking at what optionality we can create both within investments as well as optionality for how to, really bring something to the masses. And if you also study kind of what's trending right now, if you look at a lot of the big behemoths in the investment space, they're all going downstream. They're starting to tackle more of the self-directed IRAs. There's a latest announcement of another big fund that went to an RIA status. So everybody's trending this direction, and the reason is because there's a lot bigger pool that you have. If you can get yourself into a bigger pool, you have more investors that can get involved. The challenge then with the sports asset class is great. This looks really good, and we want to do something with this, but it's illiquid, right? If you're going to buy minority stakes in the ownership of a team, there has to be a buyer on the other side at some point. Otherwise, it turns out to be a vanity item. And unfortunately, everybody knows that. And so, there are some large behemoths in this space who've done a lot of research that show that if you look at teams, they're very similar to real estate assets on level returns. But again, it challenges that liquidity side. And so we looked at REITs, look at kind of the liquidity periods of that. And we kept iterating over and over and over. So to the punchline, Arthur, where you asked is, we had to develop something that is a vehicle that basically has a hold co all the way down through then an evergreen fund attached to it. And so when you're working with the SEC, they want parity. It doesn't matter if you write $100,000 check or a $10 million check, they want the exact same thing. Well, I mean, if you're somebody who can write a $10,000 check, I'm pretty sure that the person that can write a $100 million check has a lot of different demands.
Someone has
Right.
leverage, right? Yeah.
Yeah, it's substantially different. So, to create that, we basically created really the first private index for sports. And so it's basically an ETF on steroids, where at the top we have a holdco that's similar to a GP stakes vehicle. Accredited investors can buy into that vehicle. Underneath that, we hold direct assets and then funds that run with our RIA. That RIA is actually able to reap management fees off of what's called a 40 Act fund, which allows retail investors to come in to perpetuity. It can be 5 billion, 10 billion assets under management. There's no cap. And so we spent literally the last 18 months basically developing all this. So taking it from the infrastructure side, how to develop it, trialing our thesis, making sure that we have the return profile and see the gains that we want to, and then launch our first 40 Act fund. And so that's exactly what we did. So kind of back to the side of the accredited, non-accredited investor, the great thing about having this type of a scenario is the holdco there's no interest or carry. There's no fees at all. You're coming in basically at a share value, and then underneath that, you're actually reaping the management fees off of all these sub funds. So all of the non-accredited investors, they're happy to participate in this asset class and able to invest alongside some of the big names in sports. But then the accredited investors get the benefit of pulling management fees off of all those individuals playing in this. So it's a very, I would say, sexy way to unite both the accredited and non-accredited investor that hasn't been done before.
Yeah, and the way I've looked at it and articulated it, and I hope I'm right about this, is that whereas before an accredited investor, private equity investor, would be the retail investor would be cordoned off. In this case, you're using that accredited investor in the whole co to catalyze the ability for the retail investor to participate. And
That's exactly right.
and that not only makes people feel good. I mean, I don't want to suggest that we're just doing this to make people feel good, but it also opens up a large investor base that would otherwise just buy a Vanguard fund at 3% and be done with it. Now they can go to the football game and they can go to the hockey game and they can, not that they'll necessarily know that they're going to be invested in the team, but they're going to be invested in sports adjacent business and feel good that they're participating in something that they otherwise would not be able to invest in. Is that fair?
That's exactly right.
Yeah. No, and just to piggyback on that double bottom line is really important to us for a lot of different reasons. One, it supports our community of current former athletes, particularly the ones that slide into that non-accredited status over time. But also, when you look at the asset class that we're in, it's one of the few things that, as Nick said before, it's ubiquitous. I don't care if you are a fund manager, managing a $5 billion fund, or you are an employee working at a company owned by that $5 billion fund. Sports unites us. It unites us all, right? So the ability to create this type of vehicle and this parity that Nick talked about through the sports asset class, it's one of those things that it just feels right. It's what happens in sports. It's what unites us. And the ability for everyone to be able to participate, access that larger investor pool, give them an opportunity to get some higher yielding returns through an asset class that they know, understand, like, and probably support in some form or fashion. It just made all the sense in the world to us as we continue to build it and iterate on it.
And it's to use the example of the Green Bay Packers, even though I'm in Minnesota and we all know how I feel about that. But I love to use that because if anybody watched the NFL draft recently held in Green Bay, when the team ownership went up there and said, "Who's all owners?" the entire crowd went ballistic, and literally, it looked like the entire crowd raised their hands.
Yeah.
I mean, that's like the pride to have ownership in a team and do something. But my opinion, where you have groups that created something great, or some of these that are picking off minority stakes teams, there's no liquidity, right? Like, again, I actually know somebody who literally has their $1 that they own of the Green Bay Packers framed, right, to say that they're part of a team ownership. But it's, what if that actually made money for you, and what does that actually generated returns? And so that's where we stand separate from everybody else, because we took a traditionally illiquid asset class and provided our own liquidity. So just like on the NYSE or other things where it's stock appreciation, you can buy, sell, and trade on demand, we created that exact same mechanism. So we can actually invest in illiquid assets like a team, a stadium, and things around that without a buyer on the other side, or without waiting for a massive VC exit and a unicorn side. We can be patient capital, and we're going to watch that asset grow on the NAV. And then people can choose when they want to come in or out, buy, sell, and trade their stock on demand. So this is what allows the retail investors to actually get something out of it, to make money out of it. It becomes a actual trading system. And again, we're the first private alts to do that.
And just to point out the obvious, when we talk amongst ourselves, we talk about a 40 Act fund, but for everybody else, they're very familiar with the 40 Act fund because they are everywhere. And it's basically a mutual fund that has a liquidity window, and it doesn't have the requirements for you to have a certain income or net worth. You can just write a check into CVP and CVP will tell you what that's invested in at some level, right? Before we get into a couple examples of what you're looking at to invest or have invested in, I like to cover the stuff that can go wrong. So, like the you've created liquidity for illiquid asset, uh, but there's a limited amount of liquidity, right? So let's talk about the issue around that and how you've solved it.
Yeah. So, typically there always has to be a buyer on the other side. End of story, right? So, taking it from more of a mutual fund standpoint, as you said, Arthur, the way that we have this thing working is so that people can trade peer to peer at any time. So that is something, obviously, with taxation, you want to be aware of capital gains tax and the implications around that, manage your own portfolio appropriately. But this is something where you can assign your self-directed IRA into. You can actually put your retirement account to work. You can actually take control of your own finances. You can get involved. And the liquidity features are peer-to-peer on demand anytime. Then we also went a step further and said that there are stock buybacks for the firm. So we put a ROFR on there so that we can provide that at full strike price or the actual value price that it is at that day. Then there are also redemption windows. In redemption window, we are capped at 5% of the total aggregate fund, but we have an investment bank standing behind us to provide liquidity more than that. So that's the great thing is if somebody is over that number, we can still participate and get in. So we have a lot of solves in place so that one, there's not a run on the fund. Two, so that people truly can have a buyer on the other side. And three, still can actually get in and out of both the holdco position and the 40 Act position. They mirror each other throughout the entire time, the entire life of this firm.
Yeah. So before we move on to the things that are interesting that you're looking at or investing in, what's is there still an opportunity to get into the holdco at this point, to the extent that you can talk about that?
Yes, there is. So right now, full disclosure, we are capping the holdco at a certain amount of shares, but there is an opportunity right now. So for accredited investors, if they are interested, they can simply reach out to Marcus or I. Obviously, come through you as well, and we can get them directly involved. The 40 Act fund on that side of it, people can get involved in that in July. With that one, the interesting piece about that is literally from the non-accredited investors can play for $5,000, $10,000. So if you do the back of napkin math, if you have, say, 100,000 investors, non-accredited investors that are putting in $5,000 from their retirement accounts, it's substantial that comes up to the holdco. So for accredited investors, while there's still time, I would highly recommend exploring that option if you are an accredited investor to come into the holdco.
Yeah. And for the audience, all the making of the sausage has been done, right? Getting the approvals, working with the SEC, having everything aligned properly from a legal perspective. The SEC, obviously, their role is to protect the consumer, whatever that happens to be, whether it's an accredited investor or otherwise. All that stuff's been done, right?
Yeah, and that's now that we're kind of on the other side of a lot of that process. It was a pain in the butt to really work alongside those guys to make sure that we're standing up the vehicle the right way. But now that we have it, it becomes a differentiation point for us, specifically within sports. You always want that when you're dealing with retail investors and that large investor class. But ultimately, to have that rubber stamp from the SEC as a firm is a point of differentiation for us. It puts us in a different kind of in a different class, so to say. So yes, to answer your question, we've done a lot of we've done a lot of the heavy lifting. We're almost at that point where we've got a couple hurdles left to cross on the Evergreen Fund side. But we're really happy to be on track, and July is still looking like a really good launch date for us. So yeah, man, it's the SEC approval is a huge thing that we can hang our hat on moving forward.
Yeah, it's
I think the
awesome.
nice thing too is that level of scrutiny that comes with that is really good for investors to know and have, right? I mean, when you have a 40 Act fund, there is a very thorough level of oversight that's done. So I think that's a good piece for retail investors and accredited investors to have the confidence in what we've done. So really creating the infrastructure around it, doing our first set of investments in this past year to kind of see how they're going and really prove out our thesis. And just this past year alone, we're looking at a substantial gain where we're seeing about a 4.51 MOIC for just this past year, which is fantastic. We expect that to do nothing but go up. And now we're kind of at that precipice of kind of fund one going. So I think it's I don't know. I'm trying not to pat ourselves on the back, but it's nice to see the infrastructure come to life, testing out the thesis, showing it works, not only on paper, but actually the value of the shares going up. Now we're kind of at that next iteration point and inflection point of inviting the retail investors in. So having that type of a track record doesn't come easily.
Yeah, a lot of hard work. So nice. Let's talk about, can we give a little example of the types of things you guys are interested in or have invested in?
Yeah, so I'll give you two things, and then I'll have Marcus double click on some of these as well. So one thing that we really want to do is create a smart portfolio where we're truly following the digital footprint of the dollars and knowing exactly what the propensity of the market is, so that we know, again, kind of our side of the business of sport and operations, where that meets fan experience and spending. And so that is going to lead us to the highest cause of what's going to grow over the next 5, 10, 15 years, and know where we can put the capital to work in a permanent capital structure. So with that, for instance, we will look at like an anchor deal. So for instance, right now, I'll say that we're actually looking at a Serie A soccer team. We're not only looking at the team, but where it gets really appealing is we're looking at the stadium, the sports medicine, food and bev. We're going to take all of our current portfolio companies and plant them in. So we're able to capture fan experience, a digital wallet and where they're going, merch, where they're spending. So if you can think of 1 square mile, we're going to pick off everything kind of around there in Smart City. And if for those that are maybe listening or familiar with the Battery in Atlanta or Wrigley Field, that's really where this goes, where people are trending towards. But a lot of the behemoths, not to knock anybody, but what they are really concentrating on is the minority stakes in teams. Yeah. And that's great. But again, one, liquidity issues for those traditionally types of funds. And the other is they're missing out on a lot of the infrastructure downstream and mid-cap pieces that print money alongside sports. Yeah. Marketing and memorabilia, media and broadcasting rights. And then I'll highlight one of our, I love highlighting this one because nobody thinks of it. We have a plumbing and supply company that does stadiums. They are north of 60 points of margin. They are absolutely killing it. And nobody thinks about that level of specificity around sports, unless you know sports business. Yeah. And the last thing I'll say is that everything that we're really getting excited about is private off-market deals. We truly believe we have the top 1% of deal flow because of, our presence in the ecosystem and who we know. And so we get a lot of off-market deals.
Yeah, just as Nick said, to kind of double click on that, if you're watching and seeing how the sports industry is trending, it's the sports and entertainment district is like that is the next wave. That is where everything is moving. That's where every single stadium rendering that you see, every new stadium built, it kind of has those elements to it. So as we look across, Nick hit it perfectly. And anywhere that a digital dollar is spent by a consumer, we want to be in those spaces in sports. And the reality is, what it also allows us to do is diversify the portfolio, even staying in the same asset class, right? So you do have the media component, which a lot of these minority rights deals they're basically a function of sustainable media rights deals with the leagues, right? That's what produces and kicks off that recurring revenue and predictable revenue streams. So you're still getting access to the media rights through the team ownership. You're getting access to real estate, hospitality, underlying real estate of the stadium itself or the arena itself. You're getting access to some of those retail outlets that are in and around the stadium, and then the infrastructure pieces that, like the one that Nick talked about, those are typically mid-cap types of businesses, service-based businesses that, again, it balances out the portfolio in a way that we're going to be in some growth stage venture companies. We're going to be in some real estate assets. We're going to be in some, mid-cap companies, service-based businesses. So even in investing in sports, we're doing it in a way that allows us to create this pretty diverse portfolio that has all these interconnected pieces and creates that 1 + 1 = 3 effect within the portfolio. And then our background as operators first is what really allows us to connect the dots and connect those pieces in a way that makes sense operationally to drive efficiency and effectiveness through the portfolio. So our approach is one that, yes, it's sports, but it's not exclusively sports, just the product. It's all the infrastructure pieces and all of the, the ancillary businesses that makes and creates value within the sports business.
There really hasn't been anybody that's doing that. Like you said, it was, okay, I've got a incremental piece of a sports team, and so whatever happens with that is nice, but they haven't looked at it from a holistic perspective. I don't think anybody's doing this, right?
We haven't found anybody that's doing it yet, and I will flat out say I think that there's copycats, but the way that we have structured this and developed the infrastructure and proved out our case, that we're going to be light years ahead by the time people catch up.
Yeah.
So the nice thing about this is it's not something where there's like, uh, we're not like in a startup fight where, there can't be multiple players in the space. But I think the nice thing is that we have planted our flag as the first private sports index fund in an alts for all capacity. And the fact that we are doing that alts for all, I think is brand new. And the fact that we're doing kind of a private index across the sports asset class is also pretty rare. So those two things are really going to allow us to stand on our own and grow this thing to be a behemoth.
Is the index, as you describe it, represented by the 40 Act fund, the mutual fund? Or is there a separate investor opportunity? It's not an index fund.
So I think I understand your question. So the hold co will kind of represent that index piece. So
Got it.
investors
Yeah.
in the hold co will get any and every fund that we stand up, whether it's a sports fund, we eventually get to a teams and leagues fund, we get to a stadium development or real estate fund. The investors in the hold co will get access to every single one of those vertical funds that we stand up, and that's where the indexing component, exists. You can get into the individual 40 Act funds themselves if you want to, and to the level that you want to. But if you're an investor in the whole co, you get access and exposure across the entire portfolio.
Yep, that makes sense. Is it okay if we talk a little bit about the digital wallet stuff, or is it too soon?
My, Nick, did you hear that question?
What Crump's doing? Can you hear me?
Yep, sure can. Sorry, I bleeped out there for a second. So yeah, so I'll take a quick second. I'll say that we have a really phenomenal team, and one of the members of our team is a gentleman by the name of Ed Crump, who's the founder of Amazon Alexa. He is a tech guru extraordinaire, like you wouldn't believe. But one thing that we really knew that we had to do, because full disclosure, we're looking at a very large ticketing deal right now, stadiums, and all of these pieces put together, we knew that we had to track where people are spending. If we didn't, then we'd be leaving money on the table. And so Ed, with kind of his genius around all things AI, predictive analytics, and where things go, we decided to wrap together a digital wallet. And so Ed is leading that for us right now, where we're standing up our own wallet inside of what we do that's going to allow cryptocurrency, that's going to allow some of the ticketing, and again, be a platform that stood up to every single project that we take part in.
Yeah, so analytics that drive additional revenue opportunities so you can get the money that you would otherwise leave on the table.
Exactly. And I would say not only do that, but also making sure that we are approaching the right context to the way that the dollars are being spent to know what is going to be the highest propensity to purchase again.
Trending. Is there an element that you've had to look at what do they call it? The name recognition, when athletes are
Oh,
now
the
able to
NIL.
send, what the hell do they
NIL?
call that? NIL, yeah.
Yeah.
What's going on with that? Is that trending? Is that something you guys involved in? Is that did the sort of wind come out of that sail, or is it still hot?
No, it's still hot and will be hot for the foreseeable future. It's really reshaped everything about college athletics. And the funny thing to me is it's just sports marketing. Like, it's been
Yeah,
sports marketing since since I entered the league in 2006, and now that it's college athletes, it's got a different name.
yeah,
Um, but ultimately, yes, it's reshaped the whole industry. And whereas most folks are focused on the dollars going to the athletes, and how the legislation and how everything's going to shake out in Washington, D.C. we again, just our operational background, we kind of know where the waves are going to hit within the institutions as well, right? So for every institution, if you're a, you know, one of the big dogs, let's call it, the Ohio States, the USCs, the LSUs, you have one set of problems. The tier two schools have a completely different set of problems that they have to solve for because of NIL. And, you know, one of the things that we're really excited about is that tier two school, because typically college athletics is in college, college and universities, their business model is one that they receive funds from donations, and then they kind of deploy those funds, you know, against their operating budget and against their schools, and against their athletics programs. With the way that NIL is trending, these tier two schools, the donors are getting fatigued because they just have to keep replenishing the coffers, to the money goes in, the money goes right back out to the athletes. And the model is set up in a way that there's not a ton of operating businesses and operational revenue coming in the house to now deploy out to basically meet this new payroll. So we're focused on those tier two schools and really trying to figure out solutions for not just the student athlete or the athlete, because I think student athlete is going to go away. Not just the athlete, but the institution in ways that they have resources on campus, whether it's real estate, they have IP on campus, they have these different types of potential revenue producing platforms that live on campus. And we're really excited about, again, taking our model and our kind of portfolio approach and dropping that into the university setting and helping to create innovative solutions that can kind of create self-sustaining businesses for those universities.
That's super interesting because
Yeah,
they probably have lots of opportunity, but they typically don't think in that way, right? How can we uh, leverage everything that's happening? It's not my world, so sound like I know what I'm talking about, but I don't. But I can see where you're headed, that there's probably lots of opportunity within the university that they're not leveraging that would generate recurring revenue. So the donors aren't going to be exhausted. And there's, the coaches also, right? The coaches get paid a lot of money in certain schools. So,
yeah.
you know,
Yeah, and that ecosystem, it marries up perfectly with that sports and entertainment district model that we talked about before, right? So there's real estate, there's a stadium, there's retail in and around. So it's not, it looks and feels like a completely different conversation, but from our perspective, it's exactly the same.
yeah,
It's a collection of assets that if you can activate them the right way, you have an opportunity to create a smart portfolio.
yeah.
I think it's a classic. People right now are trying to really run down NIL dollars, and they're going to the donors hat in hand, as Marcus said. So when they're concentrating on that, you're also seeing some of the bigger trends by PE and other groups that are the individuals are doing large donations. Like there's one in the media with Michigan recently, right? But nobody's playing in this space. So it's a little bit of a blue ocean because, again, just like nobody's looking at those middle infrastructure pieces, nobody's looking at, well, how do we take these donors and turn them into investors? Well, if you have a vehicle that allows retail investors and SPVs and can wrap them in, there's a place they can invest, have liquidity, pump it out to athletes as you need, and then it's a constant top of funnel with new athletes every single year to invest.
Yeah, I could totally see how the dollars would have more legs if they came through a structure rather than just blown out by a donation, right? They start providing recurring revenue, like a an endowment. Super interesting. Yeah.
Yep.
Have the second tier universities, I guess that's what they call them, been open to that sort of thing so far?
Oh, yes. We're in discussions with quite a few right now.
Yeah.
Yeah.
Super
Because
interesting.
it's a challenge that it's at their doorstep. It's not coming. It's here.
Yeah.
And you know, I believe that there's a settlement that's still in Washington D.C. right now. Whenever that settlement hits, it's going to completely change the landscape. And now people have to start operating with a new model immediately, right? So we like Nick said, we've been in conversations with a handful of universities, and um, I mean, there's definitely an appetite to innovate because they have to.
And is this NIL thing where they're throwing money at student athletes? That's going to continue, but it's going to morph into something different, right? Because uh, if you throw that much money at people, things kind of get sideways, right?
Yeah, I think at some point this ends up looking and feeling like a professional sport. Um, the athletes are going to be on some type of agreement. Um, the transferring, from school to school to school. You got people that are transferring 3 and 4 times in a college career. I think you'll see agreements that come with buyouts clauses. So this will start to look and feel like to me, and this is my opinion, it's going to look and feel like a mashup between professional sports contracts and what you see in like the European soccer, like the development model, with transfer fees and rights fees, the whole nine. So I think we're going to end up somewhere in there to where players are held to a standard agreement. There's buyout clauses if they want to move around, and schools can get compensated, because otherwise, what you're going to see is the traditional recruiting model where coaches are getting high school players to come and play for the universities. You're going to start to see the big schools basically going and robbing the tier 2 schools,
Because they have
and
the
that
budget, right? Yeah.
yeah.
So
So it's
who,
got kind of you know, laid
And
in there.
I completely agree. And if you look at it too, Marcus hit on this well, like the feeder system that's been done in European soccer, and especially even relegation, taking it from let's look at, since brought up Serie A, going down to B, C, D, exact same thing. I think we're going to see that emerge. Hockey has been doing this for years, but kind of under the radar, and people haven't really studied that if you look at NCAA trends. But I mean, I know some phenomenal kids that start off their careers at a junior, right? So they go from a junior team, USHL, then they go into the AHL, and now NHL. So there are these feeder systems that have been developed, but NFL really hasn't done it. NBA really hasn't done it. MLB has dipped the toe in, and there's obviously different tiers there. But this, I think, is going to be the mass force of pushing that, and I think that's going to be that big inflection point between the big boys, as Marcus said, and the tier 2 schools.
the way it's being done now in this interim period where people are trying to navigate where this is all going to land, who's prospering? The agents, the managers, the people who represent the students? Who's who's scraping off that coupon now?
It's always the service providers, man. Their job is to extract money from the athlete.
Right, right.
It's literally their business, their job description.
So the
I,
Jerry
I think
Maguires, right? Those that type of for the college
yeah,
athletes, right?
yeah, because there's not a ton of regulation in there. In the professional leagues, you have regulation around, what a contract agent in NFL can't charge more than 3%, right? The going
Oh,
rate for a marketing agent is 15-20%. What you're seeing in college right now, some of these marketing deals are turned into IP, but they're basically IP agreements that might even have perpetual clauses in there, right? There's no time commitment, there's no time frame on it. So if you sign to my agency and I own basically your IP perpetually, then I'm going to continue to make money for the foreseeable future. If you go on and play in the professional leagues or wherever you go. So I just think that there's so much gray area that hasn't been thought of and hasn't been legislated yet, that you know typically when you're making the market, you're making the money.
yeah, right. And people are creative and smart, right?
Yep.
And sadly, if you're signing away your IP, you'll have to change your name like Prince did to get out of your contracts, right? Or who somebody else did that recently, right? Who did that? Who did that recently? The musician
That might have been Prince.
Yee? No,
Simple.
Yee. Well, who's right? He changed his name so he could get out of his contracts with all those retail customers. Look, I'm just talking. I don't know what the hell I'm talking about, but that's what it looked like to me, right? Yeah. So, you think about and you have some compassion for these athletes because they just want to play ball, right? And so you would hope we don't need more regulation in our life, but you would hope that somebody's looking after them, right? Because just like you said, Marcus, they can get screwed with perpetual rights and they'll wake up one day and say, wait a minute, they're making money and I can't even pay my mortgage, right?
Yeah, it's a new world for those athletes, and it's not a direct target for us, but the reality is, they're going to fall into that retail investor category. Some of them are going to fall into the accredited investor category at this point, right? So, again, the ability to come into money is one thing, but getting yourself in a position where you get the education and you get the access points to actually not just keep the money but grow it. That's a competitive edge that these 18, 19-year olds are going to have that my generation just didn't have access to. So we're always tracking that from the perspective of the platform, that the investment platform that we're building, and being very intentional about trying to layer in education, so that these players that are getting access to these funds, can start to put together their strategies and start to let it compound, right?
Yeah.
Because that we all know that's how real wealth is created,
Yeah, it's
is to
magic. Yeah.
in the market, to keep it in the market.
Yeah. It is magic. So are you finding that your friends, your peers, your network of people are not only interested in uh, being part of CVP, but are you targeting those athletes who are likely to be at the end of close to the end of their career and saying, look, if you need to keep the corpus, right? You have to have principle, right? So it can grow. Is that tracking and has it gotten traction?
Yeah, I mean, it's something that you, you're always navigating, because everyone has kind of their financial guidance that they're getting from somewhere.
Yeah.
Um, but it's very obviously, with our backgrounds, it's very important to us. We feel like we've created a vehicle that is worthy of investment, but ultimately, it's a win for us to make sure that people just have the information,
Yeah.
right? And what you do with that information, we'd love for you to invest it with us. But if you're making smart investments and you are, protecting your capital, you're protecting your principal, and getting into opportunities that allow you to, create some sustainable wealth and sustainable income, that's the end game for us. And, hopefully some of it's with us. But we just want to see the narrative continue to shift within this athlete community, because it's been upside down for too long.
Yeah. Yeah. That would be nice, right? It would be nice that people, I mean, in general, financial education is absent from almost everything, right? Uh, Sadly. Uh, Back to the structure, what's really cool that I loved about what you guys are doing is that people can just look at the NAV and see how they're doing, right? They can just say, okay, it was this and now it's that. uh, and I'm going to throw more money in. And then what you said, Nick, about being able to direct your Roth IRA, your regular IRA, your 401k into this structures and will be in place for them to do that. And it's as simple as, wiring money, right?
That's exactly right. Yep. So retirement accounts, whatever their portfolio needs. Perhaps a little bit to uh, a little bit to that, who we're targeting right now, because in all honesty, it's just top of funnel. It's top of funnel of individuals who need more liquidity in their portfolio, who also want an option for permanent capital vehicles. So it's a stock appreciation play. So, and we've made it so that people can exit when they want to. So depending on the flexibility of their portfolio and their appetite for getting into the alts industry, this is one that shows very stable returns year over year. It's beaten the S&P for the last 60 years. So I think this is a very, it provides good optionality for folks, whether they in their own portfolio decide they need to do something that has a 3-year punchline and they're out, or they just need to kind of put some money from like a real estate deal. They need to put it away. They need to move their IRA to something else. It's optionality, and it's top of funnel so people can understand, get educated on what we do. And so whether it's the athlete, the family office, the ultra high net worth person, there's a place to park the capital.
Yeah. And
Yeah.
you've got the holding company, you've got the registered investment advisor, and then you've got the 40 Act fund, right?
Correct.
Are there opportunities, and the answer to this is probably yes, and you probably thought about all of this, but there are opportunities for that whole universe of registered investment advisors that have clientele to then participate in the 40 Act fund or however you want to structure that.
Yes,
That's
absolutely.
distribution, right?
Absolutely. Yep. So we work with FAs, RIAs that want to allocate their clients' dollars in 100%.
Yeah.
And that structure's in place to like if somebody's a fee only financial planner or a registered investment advisor, that structure will be available, you know, in July, right? Or
Yeah.
is
And
every
in fact, actually, a lot of the folks right now that are RIAs that work with folks on their IRA plans, they're already directing them into the holdco for the accredited folks. So
yeah,
it's already active today. So it just depends on, again, where they're managing their clients' money and based on their portfolio where it needs to go.
yeah, super cool. So what else what's next? Like what's fun and sexy to talk about on the horizon for CVP?
I can go first, and then we'll see what Marcus his take is as well. So for me, I would say having the fact that the RIA is going live to reap management fees off of the non-accredited investors is beyond exciting. I haven't seen anybody do that. So as this machine keeps going, that's going to catapult the NAV up. That's going to make all of us, go dancing in the streets. So I think that's an extremely sexy thing. The other piece right now for us is we have a handful of off-market deals that we are wildly excited about. One being the soccer team that I kind of shared. We also have an opportunity to get into a ticketing company because of again who we are at their previous rounds pricing, rather than where they're going to go raise a Series B to IPO. So the fact that we're able to kind of look at these unicorns and get in at an entry point that shows big upside for us is very exciting. So I think those are the two big things on the horizon from my standpoint. Marcus, how about you?
Yeah, I mean, I'll just piggyback on the second one. You know, the ability to get access into these entry points that we can get is one thing, but the ability to share them with a broad investor base is a totally different ball game, and
Yeah.
that's the thing that gets me the most excited, because if you're reading the tea leaves and you see all of the shifts from the biggest players in the space going into more alternatives, our ability to offer not just an alternative platform, but one that we feel has potential for some high growth, to be able to offer that to an investor pool that has not traditionally had access. That's the sexiest thing in the world, to me about what we're building.
Especially in sports, because that, like you said,
Yeah,
everybody's involved, right? Yeah.
100%. And it's a world that we know. It's a world that again, it's one of the reasons why we can get to these top 1% deals. But again, the ability to share that with a broader investor pool, man, that's what it's all about. And having the RIA in place to make sure that there's kind of this perpetual engine that continues to drive the whole co. And the fact that you mentioned it's based on the NAV, right? It's a less complex vehicle than exists right now.
Yeah.
There are no K1s. There's 1099s on your tax returns.
Yeah,
There's
the
ability to
2 and
log
20 is opaque as hell.
exactly. Exactly. We've all been in them, and I think the transparency and the simplicity with which the investor can invest, track, and be in the driver's seat of their wealth conversation, that's huge for us.
Yeah, Nick and I talked about this, Marcus, because he sent me a note the other day, and I think this is exciting. If you don't mind me making a contribution here, is the ability for 40 Act funds to invest in other funds without the limit that was previously imposed.
Yeah.
Because I think that gives you an opportunity to deploy capital into places that can leverage what you guys, you have the ability because of your background, connections, and network to get into some deals that wouldn't otherwise be available. And there are other people that can do that too. And so you can write a check into a fund that you'd never be able to get into the deal that they are into, but you can, for the benefit of everybody in the ecosystem can allocate some capital to another fund, which I think just was so, you you'd like to think that some of the regulators and the people who are making the laws have our best interest, but it doesn't seem that way most of the time. I think they did in this case, right?
Yeah, this one very much feels that way, and is as a recovering financial advisor, I can agree with everything you just said.
Yeah.
There's a reason why I'm not in that industry anymore.
Yeah, the regulatory oversight is just brutal, right?
Yeah,
Yeah, it's tough. Disclosure. Well, this has been super good. Marcus, thanks for joining us today. I'm really glad to see you and meet you. And Nick and I have been talking about doing this. And so thanks, Nick. And we'll make sure everybody we push this out to everybody. And um, I'm sure they'll enjoy it. I super appreciate you guys being here. Really, really good.
appreciate you having us on.
Yeah.
This has
Thanks.
been fantastic. Thanks, Arthur.
Thank you. Thank you guys. Super
Thanks.
appreciate it. Okay.